Good afternoon, everybody, and welcome to this week's education session for the Elite Traders Club. The topic of this week's education session is combining fundamental and technical analysis. So, obviously, as members of the Elite Traders Club, we've been well versed in the importance of understanding price action on a chart, and our methodology, largely a trend following methodology, is quite specific in terms of the boxes that we have to tick, the actual criteria for meeting a particular setup. Now, some of you will also be using fundamentals or have previously experience in using fundamentals. Some of you might even be members of Jeff's Elite Investors Club. So I think it's worthwhile having a bit of a look at the use of technical analysis and combining it with fundamentals to see if there's some simple way that we can use our basic understanding of technical analysis in association with that of fundamentals. Alright, let's go through. First of all, our disclaimer, as always: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So, as always, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. Alright, so given that some of you may be wanting to use your understanding of fundamental analysis, or perhaps over the journey you have developed some awareness, some understanding of fundamental analysis with a longer term view, it makes sense with that as the backdrop to think about how we can use technical analysis to improve your entry. So rather than doing your own research and coming up with some type of assessment of a stock, looking at a chart and what are some of the key elements that we want to be checking before we actually part with our cash and invest in a particular stock. So some of the metrics to look for, obviously, the longer term trend, making sure that the trend is going in the right direction. So rather than choosing a stock based on fundamentals and buying it because it's cheap or offers good value, what is the current longer term trend? Important to understand that. Thinking about the relative strength. Now, last week's education session was on relative strength and relative strength comparison. So having a good understanding of that, how that particular stock is behaving in accordance or against the broader market. And that's a really important aspect as well, because if a stock is improving in terms of its relative strength and it's outperforming the market, then that really just shows confidence and money flowing into that stock. We also need to be mindful of the ebb and flow of the market, and really what that means is areas of support and resistance, particularly if we're looking to get into a stock based on fundamental data. Then from a technical point of view, we just want to make sure that there's enough room for the stock to move, and then that we're not coming up to a longer term peak, as an example. We also want to see that we've got good price action. We'll go through that, making sure that we've also got relevant reward to risk, and most importantly, we need to be thinking about the exit. So if we're doing this type of, if we're thinking about getting into our trades on this particular basis, a lot of the stocks that you'll be looking at, if they're offering good value, there's a fair chance that they have retraced to some degree. Because stocks, obviously, if we're buying stocks that are breaking out, a lot of stocks tend to be, have already pushed up fairly high, and there's absolutely nothing the matter with buying stocks that are getting higher and higher. It just means that the market is certainly liking those stocks. But for a stock to offer value, it quite often means that it has to have undergone or experienced a reasonable size retracement. So buying anything on a retracement is obviously a higher risk strategy. And so when you're thinking about that, certainly starting off with a smaller position size, and if things start moving in the right direction, then absolutely always add to winning trades if it's progressing in the right direction. So in terms of longer term trend, then you really need to think about what is a longer term trend. So a good indication of longer term trend, rather than using perhaps a 125 EMA on a weekly basis, then applying a 63, which is our medium term. And if price action is above those particular levels, the 63-week EMA, then certainly it's suggesting that the market is still in favour of this particular stock. If it's below the 63-week moving average, then really the market is yet to recognise the stock. So we'll go through a couple of charts and have a bit of a look at this. ASB is one in particular that we can go through and have a bit of a look. Some of the things we need to be thinking about, relative strength comparison. So, at the moment, whereabouts does the relative strength comparison sit for a stock that you might be considering? So where is it for all three time frames? We want to make sure that the relative strength comparison, just like with our technical analysis, is outperforming in all three time frames. That means that the market is certainly pumping cash into that particular stock, and as a result is performing better than the broader benchmark, or at the very least holding up better than the rest of the market, perhaps if the market is in decline. You need to be thinking about where are the major points of supply, so long-term peaks. So at the moment, whereabouts are the long-term peaks? So if you're doing some analysis, is there sufficient room for the stock to be able to move to the next long-term peak? And price action. So at the very least, now obviously from a technical point of view, as part of Elite Traders Club, we're looking for the best price action possible. And so really over the last 6 months there's been a keen focus on making sure that we've got higher troughs and that last trough is at or above the second from last medium term peak. Now you're not always going to get that perfect price action, particularly after you've had some retracements. So the first indication that a stock is starting to show a good price action and moving in the right direction is that we're starting to get the formation of higher troughs. So that's a really key element when we're looking for that price action. And then obviously in terms of reward to risk, we need to have a minimum target of 1-to-1, ideally really looking for 2-to-1. 1-to-1 is very short-term focus, and for the expectancy of a trend following system, you really want to be targeting trades that have got some upward potential of at least 2-to-1. Otherwise, you're going to need a very high strike rate. It's not to say that 1-to-1 type targets won't work, because in a number of instances they certainly will, and they'll go on to become 2-to-1, 3-to-1, those sorts of things. It's just that if we've got those longer term peaks, those obstacles in the way before we get or at around about that 1-to-1 type target, it just presents another opportunity for the market to have a bit of a rethink as it comes up to those longer term peaks and obviously major points of supply. So what I want to do is have a look at a few charts and then obviously pull all those elements together, and then also think about the critical aspect of it, managing the trade and the final exit. So as we do with the Elite Traders Club, applying a 3 ATR certainly makes sense, and if you're going to manage a trade, and try and get those running types of trades, then a 3 ATR is certainly going to keep you in the trade for a good amount of time. So certainly applying a 3 ATR makes a lot of sense. So what we might do now is go through and have a look at some charts, or some stocks in particular, and what I've done is just selected 3 fairly recent additions to the EIC, to the Elite Investors Club. So these are some of Jeff's picks, and the vertical line is the actual time when Jeff put these into his current portfolio, and all these trades are currently open. So I just wanted to go through and have a look at some of the things we've talked about. So here's one, CKF, and some of you might remember that this is actually a stock that's in the Elite Traders Club at the moment. It's in the watch list, and it was in the watch list, and it was a trade set up after we had a breakout past this medium-term peak where we had last trough well above second from last medium-term peak. So we had good price action on the basis of that. We had good relative strength as well. So applying what we've just discussed, I've put on a 63 period moving average there, which you can see. So that's a medium to longer term moving average. So where is price in relation to that? So on the 5th of the 6th, that's when the initial analysis was done. So at this point, price is above that level. So that's a tick in the box there. In terms of the relative strength, it's outperforming in all three time frames. So again, it's another tick in the box for CKF. In terms of price action, we're really wanting to see higher troughs. Now at this point, do we have higher troughs? So what I'll need to do is put on my value line and have a bit of a look and see what our troughs are. Now the low there you can see is $2.34. The low of the next trough there is $2.40. So at the very least, we do have higher medium-term troughs. Now the only other element that we really need to think about here is if there's any overhead resistance. Well, you can see pretty clearly from the chart that the highest point previously is that particular level there. So I've just drawn that in. So that's the highs there, which is coinciding with this medium-term peak here. So it's not a long-term peak, just a medium. Well, actually, it might be a long-term peak. I think, in fact, yeah, it is a long-term peak because we've got at that particular point in time, we've got a lower trough than previously. So we've got lower peaks and lower troughs. So we are in medium-term downtrend, medium-term uptrend. The highest point between those two is a long-term peak. So this was the particular time when Jeff did his analysis. All we really wanted to wait for is a break of that long-term peak. So just using your broad-based metrics, do we have higher troughs? Yes, we do. Relative strength is improving. Price is above the medium to longer term moving average. We just need to get past that longer term peak. So setting an order past that previous level, as an example, would be one way that you could use technical analysis to get into a trade, a stock on which you may have done some fundamental analysis. So in this particular example, getting in on CKF, a little bit of ahead of where we got in based on purely very stringent price action based models. So that's CKF. Another example, ASZ, and I'll just tidy this chart up a little bit and take off a couple of those ETC specific indicators. On the 22nd of May, that was the time when Jeff did his analysis, and this particular stock, ASG, stock code ASZ, came up on his fundamental scans. So the first thing we want to think about before blindly just jumping into this is, well, what's the longer term trend? Well, clearly price action is above the 63 period moving average. So that's a tick in the box from a technical perspective. The relative strength outperforming in all three time frames. So that's another tick as well. In terms of price action, we're wanting to see at the very least higher troughs. So let's go through and put on our value line and see whether or not at that point do we have higher troughs. Well, the low there, a little bit difficult to see there, but the low there is 72 cents. The low there is also 72 cents. So at this point in time, we don't specifically have higher medium-term troughs. Prior to that, absolutely, we did have higher medium-term troughs. So it looks as though the stock is having a little bit of a breather. Certainly at that point, if you wanted to say, look, I really want or really must have higher medium-term troughs, then we can always wait and see whether we get the formation of another higher one. And a little bit later on, in fact, 1, 2, 3, 4 weeks later, we get a new medium-term trough form, and that's at a higher level than the previous one. So I had to wait a little bit longer, but we did get the confirmation of a new higher medium-term trough being formed, which is a positive sign. And as you'll see, price starting to come back up to around that same level as when the original fundamental analysis was done. Excuse me. So that's ASZ. Another stock, in fact, probably the only other thing we should have done on there prior to checking everything else is just seeing whereabouts the overhead obstacles lay on this one, ASZ. So you can see that a major long-term peak is occurring at around about the $1.50 level. So if we happen to be getting in at around about 90 odd cents, then we've got plenty of upside movement to get to $1.50. Okay. So the other part of the equation is obviously the exits. So using a 3 ATR, if we're doing that, then no sooner are we getting in and the price is moving in the right direction, then as price moves along its way, there's two ways that you can do it. You can either choose to use your trailing 3 ATR exit, which is the preferred method, or alternatively, if you're a little bit lazier, you could actually use a longer 63 period moving average as your trailing stop. Now in this case, using the preferred 3 ATR methodology, we exit the trade once price closes below. So price would have closed below here back on the 11th of September. And again, you might remember end of August, beginning of September, very volatile in the markets. Since then, our relative strength has started to increase and the stocks continue to move onwards and upwards. I might just go back to CKF as well and just put on the trailing 3 ATR as well. And again, you'll see that once from entering, on a break out of the previous longer term peak at around about the $2.82, $2.85, price has moved onwards and upwards very strongly. Again, particularly in the light of end of August and that very severe market volatility, and it's moving along very, very nicely. We'll go and have a look at NTC, Netcom. Now, Jeff did his analysis on this stock last year actually, and when it was first brought to light, from a fundamental point of view, it looked very good. However, from a technical point of view, there were a few warning signs at this point in time. Certainly in the lead up to Jeff's particular analysis, you're seeing that we've got very much medium-term downtrend, and we've got actually lower medium-term troughs. So it's not really a good sign, because the demand levels are getting lower and lower, and the supply levels are getting lower and lower as well. At the same time, the relative strength in relation to the broader market on a short-term basis, it's underperforming. The medium-term basis, it's been weakening, and longer-term it's been weakening as well, although having said that, the relative strength over the medium and longer term is still greater than the broader market. So at this point, we really just need to wait until we start to see a turnaround in the shorter term relative strength at the very least, and then that's a sign that things are starting to pick up, obviously in conjunction with some of the other metrics. So you can see now that coming into sort of March of 2015, we're starting to get relative strength increasing in all three time frames. So that's a positive sign. That's the first clue that the market is starting to perhaps be drawn to this particular stock. From that point of view, after we start to get the relative strength improving, you'll notice that we also start to get our first higher medium-term trough. So again, a positive sign that we're seeing these points of demand starting to come in at higher levels. So that's another tick for the box. The other element in terms of our longer-term trend, whereabouts is price action now in relation to our longer-term moving average? Well, it's now certainly higher than the longer-term moving average. So that's a positive aspect as well. If we zoom out and have a bit of a look at where this stock's been, you've got to go back a long, long way to see any overhead resistance. And in actual fact, if we go through and put on a little green line there to show that that's the major point of overhead resistance, the major ceiling, the major points of supply that we need to think about. So as time goes by and our price action starts to improve, our candles are now clearly above the longer term moving average, our relative strength is starting to pick up in all three time frames, then we can start to think about how we might like to structure a trade from a technical point of view. Well, certainly we don't want to take a trade just prior to this long-term peak. We know that that's going to offer some form of resistance, and we want to make sure that we've got ideally at least 2 to 1 in terms of risk to reward. So once we get past this particular level, we're then in blue sky, and that's ideal. So whilst Jeff was picking up the stock at around about 60 odd cents and saw it go down to around about 40 cents, that's a fairly big move against you. That's getting close to, well, it's around about it's a 20 cent drop on a 60 cent stock, so it's around about 30% against you. That's a pretty significant move. But once things start to turn around and we're aware technically that the market's starting to appreciate this, then obviously taking a breakout trade to a long-term peak is what we're looking to do from a technical point of view. Since that particular time, all we would need to do is put on our trailing stop to see how we'd be managing that particular trade. So taking the trade on the breakout, certainly we're not getting in at levels where Jeff did it around about 60 odd cents. We're getting in a little bit later, around about 90 cents. But having said that, the stock's gone from 90 cents all the way up to $1.80 a few weeks ago. So that's 100% in pretty quick time. Now that was around about June of this year. So there's not a lot of stocks that have gone up 100% in the last 5 months, and NTC is certainly one of those and looking very strong as well. So really just to give you a bit of an idea as to the sorts of criteria you're looking for from a technical point of view, given that a lot of the analysis that you'll find, because remember, think how fundamentalists value their stocks. They look for value. So in many instances, they're not going to be buying stocks at all-time highs because they perceive them as being overvalued. So a lot of stocks, obviously having shot too far to the high side, again have to retrace before they appear on the fundamental analysis radar, if you like. So once we've identified those on the radar, we're then looking for clues that the stock is starting to pick up and be recognised by the market. So it's not exactly ETC 100% specific rules for entering. They're broad-based trend, relative strength following rules that I think make sense in trying to identify some technicals to help you get in on those fundamental type picks. So I hope that helps. If you've got any questions relating to that, certainly feel free to request a coaching call or give us a call here at Elite Wealth. That's it for this week. Thanks for watching, and we'll catch up with you at the weekly analysis session on Monday. Bye for now.